I often get asked what is the best QQQ Nasdaq 100 strategy that I have tested. Well, in this video, I'm going to look at the 3 best trading strategies that I have tested in 2020 and 2021. I'm Mark from TradeInformed.com, and if you like this video, please don't forget to hit the like button and subscribe to this channel if you want more content like this about analysing and backtesting the financial markets. I have tested literally hundreds of different trading strategies, and the QQQ has been one of the best performing markets. Not just in terms of the overall return, although this has been very good, but in terms of the smoothness of the price action. And what this means is that it is easier for mechanical and discretionary traders to trade. We get less false signals, which means we get more winning trades. In this video, I am going to cover how I compared the strategies, including the metrics that I think are the most important. I'm going to cover each strategy and show you exactly how to trade them. I'm going to show you how I tested each strategy, the results that I got, and also my thoughts about each strategy. So stay tuned. So how have I compared these strategies and why have I chosen these 3? Well, there's loads of great metrics out there, but I have chosen 3 for this analysis. Number 1, the MAR ratio. The MAR ratio is compound annual growth rate divided by maximum drawdown. So as a single metric to compare strategies, it is very powerful. Compound annual growth rate includes our overall net profit as a function of time, and maximum drawdown shows how much pain we have felt in following this trading strategy. Number 2, the win-loss ratio. This may seem like a very simple way to compare strategies, but it is absolutely crucial for our psychology in terms of implementing the strategy. You can get a strategy with 95% winning trades that you cannot follow because the drawdowns for those 5% of losing trades are too high. Equally, a strategy with only 20% winning trades can be easy to follow if you're comfortable holding on to your winning trades. It's all about how your psychology works. And number 3, average trade expectancy. Now, this is a way to measure how much profit we can get in terms of the underlying market per trade. So this makes a difference because cost of trading is a factor that many of us don't consider. So the higher average trade expectancy is, the lower our cost of trading per trade will be. Let's have a look at the 3 trading strategies. Strategy number 1 is the Renko strategy. Renko is a Japanese charting system that uses price instead of time to calculate the bars. Now, I am using it as a filter. The strategy is very simple. Trade in the direction of the Renko bricks and enter on a daily retracement. Strategy number 2 is the stochastic strategy. Now, this uses the stochastic oscillator as the entry signal. We enter when the stochastic oscillator crosses above the entry level. Now, I'm using 2 entry levels in this strategy, and I will show you what they are later. There is a supplementary filter to this strategy, and that is only enter when the ratio of the closing price divided by the ATR is lower than 3%. And the logic for this is that we only trading long trades, so we only want to enter when volatility is relatively low. The third strategy is the 2 EMA strategies, and this is to enter when the price crosses above the 3-period EMA, and it is also above the 13-period EMA. Next, I am going to look at how I tested the strategies and the results that I got. On the screen is a TradeInformed backtest model. It is built in Excel, and this particular model was created for TradeInformed members. So I'm going to briefly show you what you can do with this model. Firstly, I have each of the three strategies. I have the Renko, I have the stochastic, and I have the two EMA strategies. So you can switch between the different strategies just using the checkbox here. You can test different profit targets. You can use different ways and see how the results change in real time. You can test different markets. I'm testing on the QQQ, but you can very easily test this on the SPY, the TQQQ, or any market that you wish. We've got different exit conditions, and over here in real time we have the strategy results. So if you want more information about how to use trade-informed backtest models, there is a link on the screen and below this video, so please check that out for more information. Let's have a look at the individual strategies. Firstly, Renko. You can see for each strategy I have programmed in some different variables. So for Renko, the key one is the bar or brick size. So I've set this to 20%. We can easily change this to test different values. And you can see again the results adjusting in real time. So I'm going to set this back to 20%. Now we can also adjust the profit target. So I'm using a fairly tight profit target of just 6%, stop loss tighter of 2%, and a trailing stop, a chandelier style trailing stop of 3%. I'm also using some exit conditions. Now these are exit conditions that I've worked on over time and I really like. So we've got two different exit conditions. You can see them in a lot of my models and strategies. Firstly, I'm using them for all three strategies. Close after a number of bars if the trade is in profit. So we're going to give the trade a decent number of bars. And if it's in profit and it hasn't hit our targets, then we're going to exit it. So it's a type of inactivity stop. Secondly, we're using what I call a strength close. But the difference is for this one, we're using it for only when the trade is in loss. So all that means is 2 consecutive bars of at least this gain, close to close, we will exit the trade. And I'll explain more about that in a moment. So we have Renko. If I check this box here, we can have a look at stochastic. Now the stochastic was probably the most versatile in terms of working for a number of different settings and setups. You can see we're getting pretty good results in terms of the MA ratio down here, in terms of net profit, percentage winning trades for all of these different setups. So I found a very tight trading stop working well, which shows you that the entry conditions are quite sharp. So we were able to use a tight trailing stop and stop loss. So finally, let's have a look at the stochastic look back period. I'm using 5 bars. It's not essential to use 5, but a shorter period tended to work better, although a longer period will also give decent results. So I'm going to keep it at 5 there. My stochastic entry levels, I told you I'm using 2 different levels. Now you don't have to. You could just set one of these to 0 and we're only testing 1. In fact, that's a good way to check the range of values. But I found 2 giving a better set of results. Now the EMA strategy, I've used a different reward to risk profile for my 2 EMA strategy. I'm using this time a profit target of 3 and a stop loss of 100. And all this effectively means is that that stop loss is not active. So only the profit target is active here. However, we have these other exit conditions. So we haven't got very many variables for this strategy. We've only got 2. So we've got a 3 and a 13 period EMA. just sticking to the Fibonacci numbers, you can see we're going to get different profiles. You see, if we keep EMA2 longer, it's going to act as more of a filter. If I push that out to 35, we're getting a lower net profit, but still decent MAR ratio. So the strategy is working successfully for a range of values again. Now the exit conditions are more significant here because we're not using a traditional stop loss. So we only want the trade to go on for a short while if it is in profit. And we want the trade to exit anytime we have a little bump up, even if we're in loss, or rather when we're in loss, a couple of days that's showing a reasonable daily gain, then we're going to exit that trade. On the screen, I have the combined results of each of the three strategies. You can see that Renko and Stochastic are returning very similar results, and the EMA strategy is returning a different profile of results. We've got a much higher percentage of winning trades, and we've still got a good MAR ratio and a higher average trade expectancy. I said at the start of this video I was going to give my thoughts on each of these three strategies because the numbers never tells the full story. Firstly, Renko. It is easy to follow. If, like most people, you have a job and other commitments, this is as easy as it gets. All you need to be looking for is a close lower than the previous close, and then you enter the trade. This system relies on Renko bars. Now these are a price-based system and they are different and they are difficult for most of us who are used to candlesticks, standard weekly, daily 5-minute bars to get used to. So you need to be aware that this is a price-based bar system and it is more difficult to conceptualize. The stochastic strategy. This is probably the most versatile of the three strategies. It works well with a wide range of settings, and I like that. It makes it feel a lot more robust. However, this strategy is in the market a lot. So if and when we get a downturn, this strategy will get us into that downturn. The two EMA strategies. Firstly, number one, the great win-loss ratio. This is fantastic for people who like a lot of winning trades, and most of us do. But because we have no stop loss, this strategy, you're going to spend time with trades that are underwater, that are losing, and you have to be patient at those times because the strategy has systems to get out when the market bounces back. Also, for the two EMA strategy, there's not as many trades as the other strategies. Now, this can be a good thing or a bad thing depending on your perspective. It can be a good thing if you like to be patient, wait for the best setups. And if you're impatient, quite clearly, this could be a negative because you're going to want more action. Trade a strategy that is appropriate for you. I hope you enjoyed this video as much as I enjoyed doing the analysis. If you want more information about trading the financial markets, about trading strategies, about analysing and backtesting trading strategies, please go to tradeinformed.com.